In this video, we will talk about Fubotv. How is the company doing, the current market dynamics, and if you should buy its shares. Fubotv is a streaming platform that is similar to YouTube TV, offering cable TV content without a contract attached to it. It has a large library of content for sports and entertainment, and recently, it also purchased a sports betting company to enter in that field as well, as a potential diversification and synergy target. When we look at the stock chart, the share price peaked at $62 before undergoing an important price correction to the current level of $34. This correction is important, but we should also look at the stock performance over the medium term. Over a period of 12 months, the stock price of Fubo increased by almost 500% compared to where it was back in March 2020 versus now. The recent peak to $62 occurred after the company announced that it was going to develop the sports betting section, because the synergy between sports betting and its content is very obvious. However, the dynamic of Fubo was broken by two recent developments. The first one is the announcement of higher than expected losses in Q4 of 2020. And the second one is the class action lawsuit by investors who believe that they were misled by the management. Essentially, those investors accused Fubo management of not disclosing the fact that the subscribers gained during 2020 would likely be a temporary phenomenon, that the number of active subscribers not only fluctuates over the course of a year, but also fluctuates depending on the latest development of the pandemic. In my opinion, the larger than expected operating losses was somewhat predictable. Streaming is inherently expensive, and some of the variable expenses will increase significantly as the number of subscribers increases. The company probably knew this in advance, that subscription fees alone would not be able to yield the company any sort of profit. And this is why they recently bought the sport betting business to develop the activities in that sector. The second issue regarding the class action lawsuit is an interesting one, because it reveals a fundamental fact about the current state of financial market. To put it simply, it is still under the effect of the pandemic, and the share price for many companies is evaluated under different filters compared to normal market circumstances. The overall phenomenon has greatly influenced the capital movement within the financial market over the past 12 months, and there could be major changes to this current dynamic once things actually go back to normal. For those who are not sure what I mean, just look back to 2019. Back then, Tesla was rumored of having cash flow problems. Elon Musk, the man who is now adored by millions of people as one of the greatest entrepreneurs of our time, was said to be almost kicked out of the company. ARK Invest, this ETF that almost everyone within the investment community knows about, was only going through a modest growth back then. Then the pandemic hit. One of the first news articles that I read during this period of time was how Tesla suddenly began to increase in value, followed by the great rush to oil tankers. The reason I want to bring these back up is to use those facts as reminders of how irregular the current market is. The capital movement should be watched after closely in 2021, and same goes for Fubo. Fubotv has enjoyed an amazing bullish run throughout 2020, and this tendency even continued to earlier this year. A significant reason why the stock skyrocketed was due to surrounding market conditions, not just the fundamentals of the company alone. With that being said, I still believe that in the current market, there is potential profit to be made with Fubo, and we will talk about it now. Before we move on to my recommendations, if you like my content, please like, comment, subscribe to my channel, and check out my other stock analysis videos. My recommendation is to only buy the shares for swing trades for the next few months. The market is still under the effect of the pandemic, and that means an increase in stock volatility, especially for the shares that have made the headlines during the period, such as Fubo. There are measures to be taken that I think are necessary to make sure that the trade has a maximum probability of making a profit. First of all, the entry point of Fubo should be aimed as low as possible after the current correction has taken a pause or seems to have found some kind of support levels. This may suggest that the downside pressure has decreased in importance and bulls may try to take back the control. The second measure is to use options to protect the trade. I would suggest a combination of buying put options and selling out-of-money call options. The call options are used to generate commissions to cover part of the fees paid to buy the puts. The put options are bought to hedge against the risk of failing share price. The time frame for this trade should be within the next 3 months, and it should be certainly over by the time most economies around the world reopen. Due to the speculative nature of this trade, I would recommend a maximum exposure of 0.5% of your portfolio. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.